Yeah. Just let me know. Yeah, whenever you're ready, start letting people in. No rush. Wait, what? Where did everyone go?
Actually, that.
Yeah, yeah. Sorry, you were muted.
Yeah,
Everyone, where's the waiting room gone?
it's great. Oh, okay. Wait, you can see us things at the top.
Nah, I could, but then it all just went.
Was that because wait, well, it says you're wait, hold on.
I was co-host and I could see
Make
everything, but then it.
co-host, yes. Okay, now you can do
Yeah, yeah, yeah. So, are you ready to start letting people in?
it. Yeah, yeah.
All right, let's go.
Hello.
Give it like 5 minutes and let everyone get in before we start. What the Actually, there are people saying they can't get in.
I'm not sure why.
Like Hassan, you guys are sorting it, I think.
Yeah, I think it's just he should
Just
be.
Samuel, as far as I know. Lolo can't get in either, so we need to sort him out.
Let me see.
People have got in here 34. It's pretty much the usual squad. So I'm not gonna give it maybe a couple more minutes and we'll start because people are waiting. Yes. All right. All right, let's just get started.
Cool.
Yeah?
Yeah, let's go for it.
All right. Just see the chat, quick sound check. Can everyone hear me? See what the chat says. Can everyone hear me? Make sure it sounds working. All right, cool. Let's just get to it. So, thank you everyone for joining today. Today is going to be a bit different because there's some topics I want to cover in particular first. One of which is what a lot of people have been wondering why I've been trying to get in short. So I'm going to explain that. I'm also going to explain thinking in probabilities, as that's one of the topics I wanted to cover this week. What the hell did I just press? Oops. Yeah, that's one of the topics that I wanted to cover this week. And yeah, what else I want to cover? I wanted to cover high time frame swing trading data and thinking in probabilities. So we will talk about thinking in probabilities first because I think it's more important in terms of, like, at the end of the day, getting people profitable. So what does thinking in probabilities mean? So I am going to show you with this quick mathematical exercise, so to speak, how easy it is to just be profitable if you just play the numbers that are in your favor and retrain your mind not to think of this whole you need 5R a day, 10R a day, like SMC high RR stuff to compensate for a shit strike rate. Like, you don't need to do that if you know price action enough and you know the numbers. So let me explain. So in order to be profitable, at the end of the day, this is the maths, right? So a 1 to 2, you only need a 40% strike rate. A 1 to 3, you only need a 30% strike rate in order to be profitable. So the question is, like, how difficult is this? And in reality, it's not actually that difficult when you break down the numbers, which the pivot availability tool does for you. So I'm going to explain this now. So for the first example, I will do a 1 to 2. And for the second example, I will do a 1 to 3 and show you how the numbers work. So for a 1 to 2, you need a 40% strike rate to be profitable. So how difficult is it to get a 1 to 2 on a daily basis with at least a 40% strike rate? Let's find out, right? So if you took like a typical setup like this, for example, worst case scenario, and you just used a low down continuation like so, and let's say you entered here and you had a stop loss that's 10, but for this particular example, let's use 15 pips, right? And I'm trying to get 1 to 2. So in this scenario, you see we get it, but this is not the point I'm trying to make yet. The point I'm trying to make is this. So the criteria we're saying is basically on a day-to-day basis, we already know as day traders, we're trying to play the daily candle, right? We're trying to get in covering this in regards to Asia, right? Asia, this is the low, so ignore this wick for now, and basically get out the high. That's the best trade than what we're trying to do as a day trader. Ideally cover the wick of the daily low and get out at the high. So in this scenario, we're saying we have a 15 pip stop. So what I'm trying to say is at the end of the day, the criteria we're looking for any kind of like trade is just cover the daily high and within 15 pips and then target 2R. How difficult is that? The pip availability tool basically models that for you, right? So we already know we need a 40% strike rate just using this to be profitable. But if you put in 15 pips on EU, like so, you know that you have an 86% chance of being able to achieve 2R over the last 10 years. So basically, are you telling me it's impossible for you to get within 15 pips of the daily extreme and then just take 2R? Like statistically, you have an 86% chance of doing this every day over the last 10 years. And you only need to be right 40% of the time. And the statistics say that it's right 86% of the time. So to dumb it down even more, like let's just like take this example further. How many days does this play out? So you get TP here, 15 pips, do it the other way. You get TP here. You get TP here. You miss out here, but you could argue you definitely get to break even. You hit TP here. Although even if you were to take it like this, you still would hit TP. So the point still remains, like this is pretty simple. Because like I said, there's an 86% chance that you will be able to hit this based on the statistics. So dumbing it down, like I said, it's all literally, this is why like it's not about having 5R a day or any of that shit. Because look how easy this is on the basis of just playing the numbers. Like your goal is to basically identify the extreme, get your price action confirmation, and then hit it to get to 2R. Now, you may say that's, easy in hindsight or whatever, easier said than done. But like I said, the kill zones tell you when this is. It tells you where this is. That's the, you trade this anyway, but you're not thinking about it in terms of the numbers. And when price action is really, really choppy, don't think that you're going to be able to swing this to the moon. Like, get your 2R, like, secure it, whatever partial method you want to use, and then let the runner do the damage. Because in choppy markets like this, if you don't take your profits and protect your equity curve, as soon as you start taking losses and go on tilt, you end up in drawdown and you won't recover and you'll blow an account. So, like, listen to like literally how simple this looks. Because just looking at this, you can see how many like opportunities you could get to win and how high the strike rate is because the odds are in your favor, right? And then, like, for argument's sake, if I was to put this, even at 3R, there's a 70% chance you would do this, right? And for 3R, you don't even need even that high of a strike rate. You could go with 30%, but the odds are that you'll get 70% as long as you can identify the extreme. And if you're looking for reversals anyway, regardless of whatever system you're playing, you have to identify the extreme anyway, because you can't trade in a reversal if the extreme hasn't been printed and you can't identify it. It's actually impossible, and you will lose. So I just wanted to address that, because that is like a way of like understanding that the odds are in your favor if you know what you're doing. Does that make sense so far? In this example, you're literally just using Asian liquidity. Has anyone got an issue with that? I'm just showing you this to literally show you like what the maths are, is in terms of your favor. So basically, I'm saying if you know, like with the data says, so going back to the charts, you know where to get in already with the data. You know when to get in with the data. You know how to get in with the entry model. Are you really telling me that you can't get within the daily extreme of where your entry model, you need to identify this anyway? You're telling me you can't figure it out within 15 pips to just hit CR, knowing that you can get here 86% of the time. Like, don't make trading harder than it is. And 70% of the time, you can get to 3R. So, like, why do you need any more than that? You can clearly see this is profitable. So this whole 10R a day bullshit, like, erase that crap from your mind, because people that say that shit aren't even profitable anyway. Protect your equity curve. That takes priority. If you want to be profitable, protect your equity curve. That's the point I'm trying to make here. Because going into NFP now, for example, I secured some profits so I can take a free run at NFP. If I was in drawdown, I wouldn't be willing to take a shot at NFP, given how uncertain it is right now. It's a lot easier to trade when you're in profits with a healthy equity curve than when you're in drawdown, as we all know. So this is why I'm stressing this point and showing you through the numbers how easy it is if you can just break down your trading in a systematic way. Like, you're trying to play the daily candle, you're trying to find the top wick, you're trying to find the top wick to get as close to it for entry as possible to ride the body. Because at the end of the day, as we all know, you go on the daily time frame, every day we will see a candle and it will have a high, a open, a close, and a low. It's been like this for over 16 years. It's not going to change. So if you can understand how to play this, you will make a lot of fucking money. It's as simple as that. That's the point I'm trying to make. Is that cool with everyone before I move on to the next topic, which was high time frame swing data? Because there's something cool I wanted to show you guys. Okay, right. So let's clear the charts for a second. So I'm going to explain why I've been trying to look for shorts right now and why at the beginning of the month I'm trying so carefully to position myself. So there are some swing traders out here. So this is going to be of extreme value to you because I'm going to show you the highest probable way for you to be able to load your positions and hold them based on statistics. So what are the statistics? Let's go find them, shall we? So let's pull it. Okay, so let's go with either way. Let's go with the assumption. We know we're going to probably be bearish, but let's just pull the data for both scenarios anyway. So that's the bearish scenario. That's the bullish scenario. And we'll also do it for GU as well, just to prove that it's consistent. GU, like so. Open this one, open this one. So what do we see? So the same principle in terms of how we're trying to find the high of the week on the weekly. I built these models to show me where the high of the month is going to be, because the principle is the same. A candle is a candle. And even on the monthly time frame, which I'll show you here, same principle, it still has a high, an open, a close, and a low. So looking at a monthly candle, the best trade for this month was to get in as close to this as possible and get out here. Same with this month and so on. So if I have a bearish bias on the month, given the fact that this supply has failed and we just had this little doji, I'm just looking at this to form the top wick, and I'm looking to short this to perhaps fill in this big ass imbalance. right? So I'm looking ideally for this, the top wick. Now, where or when is this top wick likely to happen? So if you look at EU on a bearish scenario, there's an 83% chance that the top wick will form in the first 4 days of the month of November over the last 15 years. So that translates to the first week of November. So if we already know through the data that, on a weekly cycle, it's very likely that there's a 70 to 80% chance that the weekly high is on a Tuesday, I can be safe to assume that the weekly high is also going to be higher or is the monthly high, which is why I took the trade that I took on Tuesday. So that's why I decided to get in short here. Where is it? Yeah, here. Because I saw all this liquidity. This is the high time frame monthly imbalance that I'm talking about filling. And all I see is equal lows and just liquidity being built up sell side. So I'm saying, okay, this is a big ass liquidity zone that needs to get run. And I'm expecting this is just like an accumulation of positions to go short and run the hell out of all this. So that's why I entered in here and got paid out here and left the runner, and then the runner got stopped out somewhere here. And then I got in again here to attempt the same thing and short it. Because the data is so heavily skewed towards the beginning of the month being the monthly high for all months. For both scenarios too, which I'm going to show you. So I'm going to show you all the scenarios first. And then, so GU more or less is dotted all over, well, still the same thing, still within the first week of the month. For GU, same thing again, more or less. It's heavily skewed towards the beginning. So now I'm going to show you, the data says it, now I'm going to show you on the chart. So let's close this for now. Okay, let's go. All right, so let's do some charting to prove this concept. So this is on the daily. Let's get some vertical lines going. Let's move this out the way for now. All right, so let's do like the last 12 months real quick. So November starts here. Oops. So what the hell? It doesn't let me clone it. There we go. September. There. August. September. So that's the first week. First week. First week. First week. Yeah, one more. Maybe do 2 more months and that's it. Just to illustrate the point. Try this one more. Let's get November year on year. Right. So as my saying goes, you know what I'm about to say, data doesn't lie. If you wanted to get in for this month, you would have got in where? At the beginning, and you would have got out where? And realistically, when you get in on this day, you're probably going to get in with a 15 pip stop, because it's not that hard to get in with a 15 pip stop covering the lows I've just shown you. So That's your 50R trade for the month. You trade once, you get 50R. If you're a swing trader, this is all you need to do. As a swing trader, this is very important because if you've got a bias for the month, you know you need to get in here to load your positions. So you wouldn't even like do 1% if you're a swing trader, really. You'd probably be doing anywhere between 2 to 5% as a swing trader and run this for the month. Same thing here, same thing here. If you're expecting a retracement, why? Because you've got 3 consecutive bullish months. So the logic would still, in terms of consecutive candles will still remain. You're expecting a pullback, then you short this one, so on and so on. You see how all of the data is fractal. So getting in at the beginning of the month, same thing. Does anyone have any questions on this? And does everyone understand what I'm trying to say? There's nothing in the chat. How can you be so sad about what? Having another bearish month? Well, look at the high time frame. Either way, look, everyone's like looking for this magic source to tell them, like, is it bullish or bearish? Like, no one knows. All you can do is trade supply and demand relative to the time frame at B, mark your POIs and look for your confirmations. Like, there is no magic way of doing it. But like looking at price action on a monthly basis, for me, this looks bearish. I don't see this as looking bullish. At the weekly, this has failed. This has failed. Like, people will say, okay, sweep means we go up. Well, I don't trade that way. I think it's going down. If I'm wrong, I'm wrong. I don't care. Like, I'm still going to trade my plan. Like, at the end of the day, I use supply and demand and I wait for PTLR at A. And because based on statistics, I know I have a high probability of getting it right. And at the end of the day, if you protect your equity curve, like I said, you'll make money. It's not about being wrong or right. It's about protecting your equity curve and being profitable. But I do understand the statistics involved related to like trying to get most of the move, meaning I know when the monthly high is going to be. I know when the weekly high is going to be. I know where the daily high is going to be. And then drilling it down time frame after time frame to get into my entry time frame, I'm able to get a high probability, high R move for minimal work. Because it's about working smarter, not harder. So yeah, that covers the 2 topics that I mainly wanted to cover today in terms of like using the data to swing trade as well as using the data to simplify your trading to just get paid on a daily basis relative to being a day trader based on pip availability. Because in choppy conditions, you will not see 10R moves in a day. This is very choppy. Is that good with everyone? And I think we can start unmuting the chat so we can have more interaction now that I've covered the points I wanted to cover. Got you there?
Yep. If people can you guys unmute yourselves, or I'm not sure if you can't, then just raise your hands and then I guess Nia will just pick out.
Well, you guys can unmute them as well, right?
Yeah. Well, I don't know who
Yeah,
has
so
a
if someone
question.
raises their hand and accepts.
Yeah, I can.
All right, do you have any questions in the Q&A before I move on to cover this week's price action? I don't see anything in the chat. And where's the Q&A section?
Just at the bottom toolbar.
Okay, yeah,
There's nothing in there.
There's no open questions. All right, so is everyone cool with that then?
Adam's just dropped something in the chat about the playbook.
I'll touch on the playbook tomorrow. Not tomorrow, next week. The playbook is something I want to do in detail. I don't want to rush it.
You've got another question.
Okay, I'm going to go on Discord and ask the questions out of there then.
Someone's asked, how do you do your top-down analysis each day?
So I start from sometimes the monthly, but usually the weekly. So I look like this. Let's remove this. So for me, like I said, I'm expecting a bearish month. Do I think this imbalance will get filled? I don't know. I look at the weekly. Do I see the imbalance? No. So I'm not thinking there's an imbalance. Then I go on the daily. And I'm like, all right, what do I see structure-wise? So if I go here, like so, if I'm marking up a demand chain, this is how I do it. So I'm like this, mitigated this. So for now, demand is in control. Then this is a failure. So then what I do, I get my red line. I look left. And I'm like, up until this point, we thought we were bullish. This guy is the local sucker. So I'm like, okay, if he's a local sucker, this is a POI to go short. So I'm waiting for this guy to get mitigated. And then we get these reactions, and then we start seeing demand fail relative to this reaction. So now I'm thinking supply is now getting in control. So then I draw down to the 4 hour. And I'm like, okay, where do I want to trade from? I want to trade from here, which I did, and I shorted. But I'm looking to trade into it if there's enough range. So relative to the week, if it's a Monday and I know where we are and I can see demand holding, because I'm also looking at this demand chain as well. Because right now we're in a range, so I'm just playing from demand and supply. I'm not trying to invent anything or guess anything. I'm just playing the high probability zones and I'm waiting for PTLR. Because I'm only going to trade from supply and demand. I'm not going to trade anywhere else. So like so. And all I'm waiting for on a day-to-day basis is PTLR either here or PTLR in a chain that I can identify the local sucker so I know that they're protected lows. That's all I do. There's no magic behind it. There's no, like, that's all I do. I think who is in control? I trade towards the money with PTLR and I use the data because data doesn't lie. And that's why I have all these 3 things here. Because that's all I need to know to trade. My trading is very simple and it will always be simple. Because if it's complicated, I'll hesitate, I'll make mistakes. If it's simple, it's like a recipe book for me. For liquidity POI, do you always need to see a sweep? Yeah, liquidity POI has to have a sweep, otherwise it's not a liquidity POI. This flip off a chain stuff, whatever that is, I don't even define a flip as that. I define a flip as something that used to be supply that is now demand and vice versa. Wherever this flip, other community stuff, I don't trade it, I don't know it, I don't want to know it. Like I said, watch the previous video. I define a liquidity POI as if you look in back in time, where could you say somebody was in control and then it flipped? Then in terms of the control flipped, as in, for example, okay. So keeping it simple, because a lot of people are overcomplicating this. You look left to the red line, you think supply is in control. And we draw the supply chain like so. So let's just say vaguely, this is your supply chain. All I define as a flip is this. As a liquidity POI, sorry, is this. Let's go down a time frame to make it easier for people to see. So up until the red line, I think we're bearish. This happens. Everybody will be thinking up until the red line, where is it? That we are expecting to see this. And we don't. This happens. So who's got suckered here? This guy. Where's the liquidity sweep in this? Right here. So if he's the local sucker, he has rich friends that will bail him out because he's in drawdown. That is the way I rationalize it. So he needs to be mitigated. And he does. So that's why this is the liquidity POI for me that I'm interested in. And I'm waiting for PTLR to align with my new POI, because I like trading from liquidity POIs that are also demand chains. That's it. It's as simple as that. Like, don't overcomplicate it. Like anything else, you're really overcomplicating it. Like it's not that complicated. Like even look here. Like even if we were to go and say, okay, move the red line further. Who's the local sucker again? Say you said that this was the chain, and then it failed here. The local sucker is this guy. Because up until that point, him and some friends thought we were going bearish, and we're not. Right? Same principle again. Keeping it simple. Like really, really, really do not overcomplicate this. It's not that difficult. You're expecting this, and it doesn't happen. So he got suckered, so he needs to be mitigated. So that's your POI. And the chain continues. Demand is still, relatively speaking, in control because all this supply is failing over and over again. And then what am I waiting for? I've identified P. I'm looking for PTLR. I know what time this is going to occur. I know the price, the POI. Where's the liquidity? Equal highs here. L. Is there a range to get to this point? Yes. So there's R. PTLR is here. So all you need is your entry inside here. Either you take the breaker or you take you take the LOD reversal if it presents itself on the 5 minute, which it might. Let's see. I think it does. So you go here, you're looking for short-term supply to fail and form a breaker in terms of a break of the chain. This reacts to this. This is your breaker, like so. This happens at the right time, 8 o'clock, London kill zone. You can enter like this, cover this, knowing that you've come from a liquidity POI. You've also filled this imbalance. You've got multiple confluences in your favor, and you have all this liquidity to target, as well as the equal highs. And then for additional confirmation, what do? You've got your standard deviations. This should be at least 5 because it's 10. You drag it down like this. 1, 2, 3, 4, 5. That's a day target. Then what do? You confirm the probability of this, like so. You get your R tool out like so. You see the day is Monday. Then you figure out what's the probability of you hitting, let's say 5R with a 9.6 pip stop. Same stuff every single time. Boom. 9.6. There you go. 5R. You can look at 2022 because you can see 2019 is a skewed year. 2014, another skewed year. 2021, skewed year. Proof of it being a skewed year. There you go. Look at the ranges. 74 is ridiculously small. 2019 on average, 55, another ridiculously small year. 2021, ridiculously small. So I would say just use the recent year, 2022, forward EU only. So back to this example, what's the probability, the highest probability trade you could probably go for? Anything above 70% is a target, anything below that is not a good day target. So 6 hours the max, that would be your TP right there. Simple as that. Everybody cool so far?
I have a question, Neil. Can you hear me?
Yeah, I can't see how can I see who's talking?
You know what? That's a question I asked myself like 2 calls ago, because usually you can see the people above the.
Yeah, okay, Sebastian, I can see. All right.
Yeah. I know. I don't know if you remember me. I had to call with you like in the early, like 3 a.m. here. But yeah. Anyways, I know it's dumb question, but breakers, I still don't get it, man. I don't understand how you draw them or
Okay,
where.
let me show you. All right, let's address breakers real quick. So, what is a breaker? A breaker for me, the way I define it, is where you're expecting, let's say, a reversal like this, and you can see a formed supply chain or supply is in control, meaning this reacted to this, like so. So this is to mitigate the previous up move before the down move. This was to mitigate the previous up move before the down move. But here it broke. The chain broke. So I call it chain breaks breaker. So like if I do another example, let's find another one. Like, okay, this is a good one. This is a demand chain, right? Like so. This goes to here. Let's just make this nice and simple. So this goes to here. And then this reacts off this, basically. And then this is your breaker. This is where, wait, hold on, let me just fuck this up. This is where your chain breaks here, right? This is your breaker. At this point, demand is no longer in control. So when this breaks, you know supply is in control. And then when you get the line out, like I say, to identify the local sucker, up until this point, what does anybody think? They're thinking, go long. He gets suckered, this guy.
Right.
Oh, shit. So he's the local sucker. So that's your liquidity PY. This is the guy that needs to get mitigated for them to continue going short. So you can trade a fib from here to here as your continuation. That's your trade here. Stop loss in the same place as always. And then TP, like something reasonable. Either like you could use the fib and get the 27 extension. That's pretty high probability. And that's your 4R, done for the day. Because this is all you need to have a good equity curve. Just get a couple of the, one to two of these a day, and you're gonna make money. Don't need to over refine. Just get a high probability target with a good entry model at the right time. Keep your trading simple. Just don't look for magic sauce or like all this crap. Like it's so unnecessary. Same thing here. Another example of a breaker. I'll show you. So demand is respected here. It's respected again. So much so that what do you even get? You get like this breaker structure, so to speak. You make a new high, right? Then this kind of reacts to all of this last down move, like so. So where's your breaker? Well, have supply form another high. Sorry, demand form another high here. And then you got this reaction. Let me go in a lower time frame for you to see. You either say this is your breaker or you say this is your breaker, whichever one. This would be the break of the chain because this formed a new high. Like this. So then you're waiting for this to fail as your confirmation trigger to say what? That supply is now in control and demand has failed. The breaker is the sign of demand failure. That's how I define it.
Right, right.
More importantly, demand chain failure. So then at that point, typical SMC, you would go and do this, and then you get missed, and then you'll feel like a chain failure of the chain because this formed a new high. This reaction, let me go in a lower time frame for you to see. You either say this is your breaker or you say this is your breaker, whichever one. This would be the break of the chain because this formed a new high. Like this. So then you're waiting for this to fail as your confirmation trigger to say what? That supply is now in control and demand has failed. The breaker is the sign of demand failure. That's how I define it.
Right, right.
More importantly, demand chain failure. So then at that point, typical SMC, you would go and do this, and then you get missed, and then you'll feel like an idiot because it doesn't come back and tap you in after it breaks this. Instead, I go, all right, if this is my confirmation trigger, if my stop loss is small enough to know I can get good R, Meaning, for the previous example, what did I say? 15 pips, you can basically guarantee 70% of the time you can get to 3R. So why am I hesitating if I know I have a 70% chance of getting 3R? Because I've already identified this as the high of the day. Because this falls within the kill zones. So you have data you have a data confirmation to tell you what this is. You've had liquidity taken, meaning this is the local sucker. If you look left, same principle. Keep things simple. I can't stress this enough. You look to the left, what do you think? You think, up until this point, high, 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 low, high, 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 low, high, 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 low, you're going bullish. And then it doesn't happen. So this guy is the local sucker again. But are you going to get this limit sniper entry order at 5 pip or whatever stop loss to flex with Instagram? Probably not. A lot of the times you get missed with this bullshit. So I just looked at the maths, I looked at the data, and I was like, well, if this is my confirmation trigger and I can get 3R with 70% accuracy, why the hell am I not in? Because I have PTLR, and where's the money? All of this shit. So why would I not just simply just get in, knowing I can at least get 3R with 70% accuracy, and then use my pip availability tool to figure out the rest and standard deviations? But I know if you were told you only need 35% or 30%, what is the example? You only need 30% to be profitable at 3R, and you have a setup in your face saying you have a 70% chance of doing this. Why are you hesitating? It just doesn't make sense rationally. Like, the maths checks out. You have a 70% chance of hitting this. Even in this example, like, look, we'll even break it down. Where is it? Over here. Like, I can't stress this enough. Just keep your trading simple. People overcomplicate trading and make it harder than it is. It really isn't that difficult. When you just keep your system simple, you look for the same thing every day, and you set high probability targets, which you have now based on the data. Like other like systems, okay, I can agree they don't quantify each R. You have a system here that does. So you have an edge. You have a proven statistical edge that no one can chat shit about. Like, this is it. So 16 pips. Let's go over here. So, evening simple, if you look at 2022 as our reference point, any target above 70% is good. So we know 2R is guaranteed, 3R is also guaranteed. So these two, 3R, you could probably partial or take all your money and you're going to be on your way to profitability. Great job. Or if you wanted to stretch it a bit more, then you start looking at standard deviation stuff. This is 20, so it's about 4 standard deviations roughly. 1, 2, 3, 4. Then you can maybe stretch to this. Then you see, okay, it's close to 5. What's my odds of 5? Double check it. 5R, not pretty high, so maybe you partial a little bit here. Or given the fact that your stop loss is so big, what can you do? Another trick that I do, this is the beauty of having a larger stop loss, is you can literally, as soon as you close on the 15M, where are we? Over here. Let's move this out of the way. As soon as you close properly on the 15M, what I do, especially if I'm on the move and I'm not like on my computer, I'll literally say, okay, 1R, close, cool. Once it hits here, trading stop here. Once it hits there, trading stop to 2R. Once it breaks 3 and closes at 4, lock in 3, and so on. And you just ride the move until it takes you out. So then you get the 5R, but you protected your money on the way down. That's the beauty of even having a bigger stop loss. Like, I can't even describe how like nice it feels. Like, okay, you just set an alert and you hear ping and you go break even. You hear ping, you lock in 1R. You hear ping, you lock in 2. While all these people who are trying to enter in random places on the 1M in the middle of a daily candle are getting chopped about and they're stressing that they can't get to break even. And they get called inducement over here by this candle. And then they take a stupid loss because they're entering when there's barely any range left for the day. And you already know where to get out because you also have the data to say optimal exit time is around 5 o'clock, and look what happens. There you go, 5 o'clock, like I said. Not capping, where's the data? It's over here. There you go. 5 o'clock, 5 o'clock. Yeah? Nice and simple. You know where to get in, when to get in, where to get out, when to get out. You have everything you need. This is a complete model. And you see it over and over and over and over and over again. Any questions? My question. All right, I'm going to go through the questions on the Discord now. And then any questions that are in the Q&A, I'll go over after that, just so everything's organized. Okay, there's no questions in the Q&A anyway, so let me go on to the questions. Questions put in the Q&A, I won't read them in the chat. Okay, so I will do the Discord questions first. So let's start. Where's the Discord questions? That's probably the best place to start. All right, there we go. All right. Who's gonna have the first question? Let's see. Damn, you guys got a lot of questions. You guys not making it easy on me. All right, where to start? Okay, let's start with structure. Yasin says, hello, Nia, don't understand structure here. I've covered that in terms of liquidity POI stuff already. So that's already answered. Shift in swing structure by L. Jewel. When do you consider a bullish swing structure to shift? Bearish. I don't look at anything that's like two bosses or floor or any of that. I literally just, I look at supply. I'm thinking simple question. Who is in control? Find my breaker. Continue trading the trend. Because I'm always going to trade in line with the weekly move. Because my goal is to get the weekly move. That's how I do it. This is that one. Yenny Chan asks, hey Neo, I wonder if the Asian expansion to one side only counts. If the candle closes above the Asian range and not only wicks it. I mean, if the liquidity is taken either way, but on Monday, when the Asia high is not wicked, it made us enter on the wrong side of the market. Could you show us again which range you use for drawing the fib tool entry? Always get confused. And the last question, do you only catch trades on Monday and Tuesday and let them ride, or do you also look for trades on Thursdays? Okay, so let's break it down. So what do I do every week? I'm greedy. I want the weekly move. Everyone knows it. It's what I preach, because that's just the way I trade. I like getting the weekly move. I want to hit really, really high pip, good R, and let the runner do damage. But I still want to get myself paid on a daily basis. So why do I enter on Monday and Tuesday? Because it's the highest probable time for me to get a weekly move, like this one. This is a 174 pip range. And I am looking to get in here based on a POI that I would find to the left. There he is. And I have a bias already in the week on the basis of the high time frame. I'll be looking on the weekly and I'll be trying to trade the weekly trend. So when I can see a POI like this, that it hasn't been mitigated, I'm waiting for PTLR to get here, and I want to take this move from here to here, because I already know this will be the weekly high based on the statistics, and I know the average weekly range. Therefore, I know where the weekly low will be. So this is the move I'm trying to do. Now, if this move has happened like before the end of the week, say Thursday, then I know the weekly move is done. So let's make this bigger. So this happens on Thursday. This is your weekly low. So let me just annotate this real quick to answer Yenny Chan's question. Because she's asking if I would do anything after. So the weekly high identified, the weekly low also identified. because I know what the average weekly range is. So then at this point, you're asking, will I take any other trade? The answer is yes, because this is what I would call like perfect conditions for what is known as a TGIF setup, which is known in like the smart money and ICT community as thank God it's Friday. Meaning when you look at a weekly candle, what do you notice? They all have wicks, right? The wick, the bottom is the low of the week, which is what this is. But if it has a wick, it has to close somewhere here. So it means that Friday, if this happens on Thursday, the weekly low, Friday will have to be bullish in order to create the wick, because the week has to close here to form a wick. So then knowing that, and then also using other pieces of data, for example, we've had 1 bearish day, 2 bearish days, 3 bearish days. The probability of the 4th day being bearish is 8%. So there's a 91% chance on this day that we're going to go bullish. Coupled with the fact that we've hit the weekly range, and coupled with the fact that I'm expecting a weekly wick, I know that this is a slam dunk opportunity for me to go long. So with that being said, if we drill down this entry, I would be looking for this trade because I've already made this 10R on the way down, and I've got a high probability, 91% chance bullish direction, bullish bias trade in my favor alongside the consecutive candles. So I've got all of these things in my favor. So at this point, I can just play the New York continuation because this is a liquidity POI, because this is a local sucker. So I could just play this like so, wait for this to enter at the kill zone, which at the time was 1 o'clock. My sessions is screwed up because of the time thing, but this is New York kill zone, enter like this. Where is my invalidation point? Magic fib, low down continuation here. Where is my exit? Either here or where is the liquidity? Trade towards the money. Buy side liquidity here. Or the summons you guys know I've got from Phantom ERL, right? What time does this occur? 5 o'clock. Same shit as always. I knew when to get in, where to get in, where to get out, what time to get out. Complete. In line with what we would expect is the weekly wick. Make sense? I don't know if Yenny Chan is here, but that covers her question. Okay, next question. Who's next? Too busy. What's man saying? No. How to identify non-trading day based on data? More local. Okay, we've done local soccer examples. So I know people probably like me saying the local soccer a lot, but like, yeah, I think we covered that enough. But how do I identify non-trading days? Okay, so a non-trading day for me is dictated by news, meaning if, for example, we're going to get a whipsaw in New York, there is absolutely no point really for me to trade London or to trade Asia. So this was why I built this. Where is it? The red folder news stuff. Because I wanted to know which news days am I likely to get a lot of whipsaw and I need to secure profits. So what was it? Fed interest rate decision yesterday or whatever it was. So if you look here, there was a high probability that you would get the extreme printed late in New York. So at this point, I have no real edge trading London or Asia, or anything that I trade in London and Asia could potentially be short-lived. This is why this week, when this thing went down and I got in from here, I closed a lot of my position before FOMC or whatever the hell this was, JOLTS and the Fed interest rate decision. I closed like 80% of my volume here because I did not want to get bitten by any bullshit. So I locked in my profits and then it did this and okay, it left without me because how would I know that, like, where do I put my stop? Like, there wasn't really a confirmation entry here and there isn't a lunch money entry. So none of this fits my criteria to take a trade. So all I did was I entered short, took my money and just ran away. But in cases where you have, so let's find a good whipsaw event, like something that's like, okay, there you go, NFP. Like, I did take this move and made a lot of money on it, but this is still dangerous because it's whipsaw. Like, unless you were prepared, there's no real way you can enter. You can't enter Asia for sure, and London was risky. Well, London was risky if you held and you tried to take a continuation here. But in general, what I do to identify like bad days not to trade and etc., I look at the news event in particular, and I see if there's a probability that's high that the extreme is going to be printed in New York, then there's no point me trading Asia or London because I can't find a reversal if I don't know where the extreme is, and I can't take a continuation if I don't know where the extreme is either. At least for the way I trade, I can't do it, so no trade for me. Cool. I go do something else. I go gym. I don't know, play video games. I don't know. I just do something else with my time. I build data models. Whatever I do, I'm not trading because there's no edge. There's no edge. There's no trade. It's a gamble. I don't gamble. I trade. So that covers Michael's question. Now, Dreamliner asks, how do we frame our weekly bias in the most mechanical way? All you could do is draw your high time frame POIs, top-down analysis, draw supply and demand zones where you want to trade from and follow PTLR. Because at the end of the day, if you have all of these things line up, you'll take a high probability trade regardless. That's all I do. And then I use the consecutive candle analysis to know when I'm expecting a pullback. So that helps me with my bias. Because if I know there's like a 90% chance that the daily bias will be something else, if I get the POI and the price action confirmations to confirm it, then I can enter, you know, short or long, depending on what the analysis says. That's the most mechanical way I do, and that's what I do at the end of the day. And by like the consecutive candle analysis, I mean this. So meaning if we're like 5 days in and it's saying there's a 95% chance that we're going to go bearish and we hit a supply zone as well as this, then why am I not going to listen to it? The odds are in my favor. If I've got PA confirmation, PTLR, and this, I'm an idiot for trying to still go long. Because there's nothing other than how I feel telling me to go long. And the market doesn't care how I feel. I just play statistics. So that answers Dreamliner's question. Tick over there. Right, we're going through these quick. Morphic, question for the core. How do you use DXY long-term and short-term? Right, okay. Chart, time. How do I use the DXY? How are we on time? Okay. Oh, I'm going to really regret this. Yeah, I'm going to regret closing this. Oh, well. It is what it is. Anyway, how do I use the DXY? So if I'm expecting, let's say, EU or GU to go bearish, then I know that the DXY has to go bullish. So all I do is I literally analyze, because they're correlated, I analyze the DXY like I would analyze GU and EU. It has to be a supply chain or demand zone, whatever, in order to for the story to match up. So I can't expect to go short at a supply zone on, let's say, EU if the DXY isn't at a demand zone. So if they're not lining up, then I know there's an issue. And therefore, I may not take the POI on EU seriously if DXY is in no man's land. But if they're like both in places that it makes sense, I mean, I wouldn't say this is a great one, but let's just say, for example, where you say this is your demand, then you would say, okay, if it's at demand and you're expecting it to go higher, then you expect this to be at supply and to go lower. So then it just adds confidence to what I'm trying to do. Or if you know there's imbalance that needs to be dealt with on, say, the DXY, like, I don't know, if you said this was imbalance or an FEG and we had to come to the extreme, and this is extreme that needed to be mitigated because it broke all this structure, for example, then you make the argument that, okay, if the DXY needs to go lower in order to mitigate this, then that would mean that the euro and the pound have to go higher to mitigate something also that aligns with that story, which could be something all the way up here, for all we know, or here, right? So that's how I use the DXY. Not about the use of DXY, but how do I see the DXY long term? I see the dollar going bullish. So let me have a look. The daily. Oh my God, this has been messy. See, this is why you use pip availability and secure your profits, guys. This is a mess, but you can make money here, 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 here. So please take what I said at the beginning of the course seriously, because I'm not just saying it just to say it, like it does help. You'll make more money getting 2 to 3 R or 2 to 5 R a day and using dynamic risk than you will trying to be that guy trying to hold to 15 R for Instagram. I'm telling you this, like, please listen. I want the DXY to fill this in. I also want the DXY to potentially mitigate this, or if fundamentally due to the war and all the other stuff going on, the DXY is bullish, then I want it to make it hit the high. I want this to eventually go. That's where I see it going long term. I see the DXY being bullish. Just my opinion. It could be wrong. We'll see. But that's my opinion. I don't see the DXY going short. If it does, it'll be a surprise to me, and then I'll react and I'll, adapt accordingly. But for now, I want this to go up. I expect this to go up, so that's what I am planning for. Okay, I think that answers Morphic's question. So, who's next? Do you only take trades based on your daily bias direction? Yep, I only trade pro trend. I don't trade counter trend. Not my style, don't like it. I want the whole move. I'm not interested in 10, 20 pip moves. I want 50 to 70 pip moves because my system tells me when to get in, where to get out, what time to get out. So there's no reason why I can't get the whole move. Okay. Fear asks, when to go on the 5M? Get your 15M confirmations when you want to see, you go on the 5M time frame when you want to refine your entry or get more confirmation you can't see on the 15. So what's an example of that? So for example, on the 15 here, there is no confirmation to get in. So I would have had to go on the 5 minute like I did. And I needed to see some form of reaction to supply. So I had this, and I needed it to fail, which this was close enough to failure for me. So I just entered like this and covered the high. But on the 15 minute, I can't see that. So for me, this was the failure. As soon as it did this, I was like, I'm good to go. It retraced a bit. There was no real local sucker here because this didn't really sweep anything. So most I could do, I was just like, well, I want to get in and I know my stop loss is 15 pips and this has happened at the right time. So I know what this is. And at that point, I just said, well, one, my bias for the week was to go short. 2, this happened at the right time. 3, I got my confirmation. 15 pips, I know I should be able to get 3R with 70% chance, which I obviously did. And where's the money? Well, you got liquidity zone here, so PTLR is valid. Like so, liquidity zone. Standard deviations, we could do that too. So we have a 23 pip range, which I think is on the top of my head, 4 standard deviations. I'm not sure. I'm pretty sure it is though. Drag this up here, like so. Boom. 1, 2, 3, 4. That's a potential target right there. Like so. What time is the low? Oh, will you look at that? 5 o'clock. What another surprise. It's like I made this up. Same shit, another day. All right. Skip your question in Discord. Which question? Which question did I skip?
There's the Michael Segovia question.
Which question?
Michael's question. I think it was supposed to come after 2B's question.
Question before fear. I have a problem that I'm always looking in my chart, even if I'm in profit, it's like an addiction. Like I have a problem that I'm always looking in my chart, even if I'm in profit, it's like an addiction. I want to check the trade despite the alarms. Do you know this feeling? How do you handle it? Okay. I don't look at, so once I set my entry, so for example, say I set this, what I would do, I'll set this. I wonder if I have this thing here. Let's see. Yeah, set my break-even point, the magic keys. And at this point, it's down to 4xG. Because at this point, I've done everything I need to do. Me looking at it will change nothing. I've accepted my risk. So as cliche as it sounds, set and forget. Because looking at it will do nothing. You can't save yourself. If it goes into drawdown, tough shit. Like you can't save yourself or whatever. Like you have a mechanical stop loss. This is your invalidation point for your trade idea. If you chicken out and then you close and draw down because you're scared, and then it doesn't go to your stop loss and it hits, you're gonna feel annoyed and feel like an idiot. So once whatever trade idea you have in the 3 entry models I teach, they're all invalidation points and they're all mechanical. You set your stop loss, you set your break even, you know where to go in terms of your TP, whether you take high probability 3Rs or 2Rs, or you hit something further, as long as pip availability tells you it's not stupid, and you set and forget. Because you watching a candle will change nothing. Like logically speaking, you know it's true, so just don't do it. Set your alarms and go away. Go do something else. Go do your journal. Go build a playbook. There's so many other things you can do that require your time relative to trading that you'll say you haven't got the time to do. Now you've got the time. During that time when you've already entered your trade, that's the time you do all that shit. Be productive with your time. That would be my advice. That's what I do. Anyway, I hope that answers your question. Okay, another example of the 5M. Right. All right, I'm going to cherry pick because I want a good example. So there we go. This is a good example. I love this example. It's the one I've done in a lot of coaching calls. All right. You are looking for a distribution to sell here. You have some form of POI over here. Let's just call it high time frame 4 hour, whatever it is. You are looking, okay. The time limit thing, this is actually London high. This is the session thing being broken. But anyway, bear with me. You know this is the London high. This is your London high. It happened at 8 o'clock, London kill zone. Oh shit, wrong one. London kill zone, like so. All you're looking for here is your breaker to be able to get involved here. On the 15M, you won't see this as well. On the 15M, you would only say the breaker happens here. Distribution is just like, it's just where you sell. Like in smart money, a distribution is basically the consolidation before a markdown phase where you distribute your orders to be able to sell. And accumulation is just the same thing, but opposite, like here, where you do this to buy. Oh, crap. So accumulation is just a collection of orders before you go bullish, and distribution is just a collection of orders before you go bearish. It's just the terminology. It's not important for what I'm saying. All you're concerned about is this a reversal, smart money reversal? Or what I call HOD reversal, because I know this is the high of the day. Now, to answer your question on the 5 minute, because this is what the question was, you have, let's say, demand on the 15, and then this would be your breaker. The reaction to the 15 minute, like this reacts to this chain, and it breaks here. So this is your breaker. But that would mean your confirmation triggers all the way down here. Whereas if you looked at the 5 minute, it gets refined more. So you can see your confirmation trigger early, because then you would say, no, where does the real switch in control actually happen? it happens here because this reacts to this. So this is your breaker. So you can get in earlier. Then at that point, you either enter straight with the breaker because you know your stop loss is within 15 pips, and therefore you know what? You can get 3R easily, like I said, because the statistics are in your favor. Or you play the continuation, because this is a local sucker because you have a 5M chop here. Like so, 5M chop. It's nice and simple. You've got your chop and you've got your supply, sorry, your demand failure. So you've got everything you want. This happens at the right time at 8 o'clock, London Open, PTLR. Therefore, you can take this trade on the continuation using this as a liquidity POI. Because this is the local sucker. So we mark the local sucker, we identify him so everyone can see him, like so, local sucker, and then we trade like this, take the continuation, enter anywhere from 50% off, put your stop loss on the red magic fib line that I reverse engineered, TP, let's see, 20 pip range, so that's what, 5 standard deviations, 4 to 5 standard deviations, I'll prove it in a minute, give me 1 second. Where is it? No, yep. 20 pip range, 4 standard deviations, right? Okay, so back to the example. Well, it's a Thursday, so it can be 5, because we know that Thursday is what? Thursday, on average, is bigger than the average day, which I can prove over here, right? Thursday, for the last 10 years, is usually bigger than the rest of the days. So our target should be between 4 and 5 standard deviations. So 1, 2, 3, 4, stretch to 5, like so. What time does this occur? Let's see. Roughly 5 o'clock, 5 to 6 o'clock. When it's consolidating, what is it? Well, 5 o'clock would have been a good time to exit anyway. So it still works. And that's how much R? Let's move this up there. Oh, this one's in the way. That's why I was confused. How much R is this? Entered here. Stop loss here. What is that? 8.6 R? There you go. But you knew, and then yeah, PTLR. PT. So P is a POI over here, 4H zone. Time happened at the London kill zone. L, where is the money? Right here. Liquidity zone. Right here. However you want to look at it, right? If you want to draw a trend line liquidity and say, oh, look, it's IRL. Look at him. He's cool. Whatever. Who cares? Same thing. So we want to do what? Trade towards the money. Same thing every time. Keep your trading simple. You had the breaker entry, which is the HOD reversal. You had the continuation. TP, the same. Time, the same. Look at the daily candle. What are you trying to do? Enter as close to this as possible. Exit as close to this as possible. That is trading. That is the game you're trying to play every day. Because look, even in like the day before, where is it? No, where were we? Yeah, here, look. Even the day before, where you got bullshit like this for a day, right? This is your daily candle. It will still print a low, a open, a close, and a high. So you entering on the 1M in the middle of no man's land, getting chopped around and just taking loss after loss. If you just focused on what time this is going to occur, you could literally enter here, exit here. How would you do it? You find the local sucker. So wherever your liquidity POI you want to trade from is, and which in this case is here. This is actually New York, but my session thing is messed up. And you could have just traded the fib. Entered there, avoided all of this noise, and hit your TP wherever you want. Exit but one of the hotspot zones, 3 or 5 o'clock, and that's it. Nice and simple. Okay, next. How much time have we got? Shit, got 10 minutes. All right. I've got 2 questions left. Fears lost in the 5M, we covered that. Jay asked a question. How do you determine your high time frame bias? Top covered that already. Mustafa says, new here, basic question. How do you exactly use all of the data that's on the website to give a bias? You need to watch the previous 2 session calls. It covers that already. There's no point covering it here again. Okay, that is all the questions here that I can see. Is there any questions in the chat or the Q&A? Dutchy, do you see any?
Nope, it's looking good.
Does anybody have anything to say?
I do have a question. I have another one. I already asked the question here, but I don't know if anyone else wants to ask the question first.
Okay,
Should I go?
speak up because I can barely hear you.
Yeah, so something happened in GU today. I was doing my end of day today, and it happened on London. So I was trying to identify the local sucker, but I'm not sure if it's one of the two. If it's the one that happened at the on Wednesday at 5, at pretty much the open of the day. So I don't know if you're already on GU. So it happened. Let me see if I can mark it out here on the Zoom call. Give me a second. Annotate. So this right here. Can you see it?
Yeah.
Yeah, so I thought that was the fib where you're supposed to draw it, but I don't know if you would consider this as liquidity also.
So I look for the obvious local sucker. So ideally, I want it to be from here. But if you're looking like, like I say, I want everyone to do this exercise when they're trying to identify the local sucker. You get your red line and then you visualize in your mind, if I was looking left, what am I thinking? Because everyone is seeing the same chart, right? So if for whatever reason you was, let's say, thinking that we are bearish, yeah, local sucker means liquidity POI. So if we're thinking that we're bearish, because let's say we broke this. So from order flow perspective, in terms of New York lows being respected, they're not being respected. So at this point, you might say, okay, let's draw supply, because we say supply is in control, right? Now, this is why I don't like FPGs, because like you have this gap here. So then are you saying it's being respected? Are you saying it's not? I don't know. I don't care. So keep in mind, I didn't take GU because I was unsure, because I couldn't justify what is this? It's not reacting off anything. So for me, this is not ideal for me to trade, because I can't rationalize why it's rejecting something here. I can't see it. The only justifications you go and say in hindsight, okay, you have a flip zone here, but even that, it doesn't hit it. So I just didn't like it in general, because this doesn't form a lower low for me to be thinking that supply is in control. So right now, I would be drawing demand and supply, and I'll just be trading from these zones, because in the middle, there's nothing anyway. But this was the reason why I didn't take GU long, because I didn't trust this or whatever this is as a POI. So I just left it alone. Simple as that. So yeah, don't really have an answer for you, because this isn't something I would trade, which is why I didn't trade it. Because when in doubt, stay out. That's my rule. I didn't know what this was. I see imbalance here. Only way I could justify taking this, honestly, is if I take a CPV continuation, meaning you say this is a CPV, this swept something, so you could say perhaps you're expecting this, so then this would be your local sucker here. He got fooled when this broke. To justify now, this is a POI. This is what I'm saying, in days that you don't catch the move, reverse engineer and see how you could have caught it. This is what I would be doing. Because I didn't take this move live because I didn't see it live. But I would learn and say, okay, if this is the last down move before the up move, and it swept liquidity, like so, So then this is my local sucker that I'm looking for. I'm looking to either just take a fib from this to this, or I'm looking for this. Let's rewind this a bit. This work? No. I'm looking for this. Where's the daily candle? Yeah, there we go. I'm looking for to get as close to this as possible. So, but relative to the way I built the data, I do it from midnight of Asia to the day close. So the daily low in the context of data is this, right? So ignore this for now. I'm looking for this to be printed in the London kill zone. And ideally, if I'm looking for an LOD reversal, I want a confirmation into it. I'm not just going to take it as a risk entry with my fib here if I can avoid it. Because I know I can get better risk reward if I get a confirmation entry on the 5M like this, which I'm going to show you. So like, I'm looking for short-term supply to fail. So something like this. So this is a supply chain. This is my breaker. Then I also get a 5M chalk like this. The second thing that I would like to see. Then you get your red line, do the same concept again. You look left, what are you thinking? Higher high, higher low. It doesn't form right here. Doesn't form the lower low. Break structure. So this is protected because this is the local sucker. After this, I'll cover NFP quickly in terms of what I want to see. And then from here, no liquidity in the leg, so you have to play the extreme. But like I said, maybe this case, you get lucky and you can do this type of entry. I typically just would do this and cover the low. So I can enter like that, and I just cover the low like this. Then I just need to figure out what is my daily target. It's a Thursday, so I would want 4 standard deviations, but it probably won't happen because of NFP tomorrow. So you go like this. 1, 2, 3, doesn't happen for 4. Touched it. So what do I do? Okay, 1, I wouldn't have a 2-pip stop loss. I probably have 5. So maybe I give this some breathing room like this. Because I don't do 2-pip stop losses, even if the data says so, I won't do it because of slippage. 1, I've got low down liquidity. So I know the probability of getting to the other side is basically 65 to 70% to get to here. So that's a 7R trade. So I would definitely hold into this. And then if I wanted to get any more, like let's say to 10R, then I need to look, all right, at a 5-pip stop, what's my probability of hitting 10R? Because that's the max I'll go in a day anyway. So 5-pip stop on a Thursday, what's the probability of 10R? 80.8%, and in 2022, 94.2%. I'm holding to 10R. And I close off everything here. I don't care, whatever that is, I'm taking off all my money here because I'm protecting my equity curve. 10R is enough. If the 9/10 p.m. daily close spread candle isn't fat, I don't look at the spread candles.
Why?
That's why I didn't trust this, because historic, like 1, my modeling goes from midnight anyway, and then 2, I don't have enough experience or backtesting to know if this is valid or not, which is why I didn't take it. But like I said, on a day-to-day basis, if I miss the move, I reverse engineer the move, so I'm better prepared for next time. Like I just did here.
Why is it that you move the standard deviation tools to start the countdown to 1, 2, 3, 4?
Because the standard deviation tool is relative to where the daily low is, relative to my data. So if I'm saying, where is it? If I have a 20-pip range and I know it's 1/4 of the day, then I have to start from where the day starts in order to figure out where the top is. So you have to start from the low and then you say that's 1 standard deviation, that's 2, that's 3, that's 4. Because it's relative to the day range.
Right.
Like, okay, let's use this as an example. 25 pip range is what? Three standard deviations. Let's just round it roughly. So 3 standard deviations. So what we would do, we drag this here. 1, 2, 3. That's your target. Because if you did it any other way, it wouldn't make sense. Like, you can't say that's 1 and you've got like half of a standard deviation not counted here. So you have to do it like this. 1, 2, 3. TP.
Right.
With the continuation fib, do you pick the... No, don't pick the level. You react relative to your risk reward. Like, there's no magic level, etc. You have to make a decision yourself based on how much R you want relative to risk reward ratio. I enter off anything below the 50% if it makes sense. So if I know, for example, in this scenario, that this is my daily target, like so, and I know this is liquidity POI, and I'm looking to take a continuation off it, do I get it here? I get no entry here. So now I'm looking for what? A next liquidity POI. This is a sweep. This is CPB that fails. So I can take this continuation. This swept something before going up, so I can take this continuation. But the issue is, how much range do I have? Barely anything. Problem. So this wouldn't be valid for me. Because there's no range left in, like, can I get, let's say, 2R with this trade, knowing that that's my daily target? If no, then I'm not taking it. The answer is no. So this isn't valid for me to even take anyway. So in this case, the level I would have wanted to enter on for this to be valid would be, if I want 2R minimum, I need to enter here. And it doesn't happen, so I don't take the trade because there's no range for me to get my target. Pip availability tool, a standard deviation tool are relative to the low of the day. Yes. Okay, that covers all the questions I can answer today. I need to cover NFP and then we'll call it. Okay, what do I want to see for NFP? Like I said, I want, ideally, I'm looking at the monthly time frame. What do I see? For me, my opinion, I see us going down. I do not see us looking to go long from here. Just my opinion. If I'm wrong, I'm wrong. Doesn't matter. Because if I look at the same thing on the DXY, does the DXY look bearish to me? It's a good question. Does it look bearish to me? Why are we here? Could this be one giant mitigation? Nah, I think we're going long. I'm still sticking with my bias. And let price tell me I'm wrong before I change my bias. Like, I'm going short. That's my decision. If price changes my mind, then I'll change my mind. Until then, my bias is I'm going short, and that's that. So with that being said, if that's my bias, what am I looking for? So the weekly profile. So let's look at it from a statistics perspective. GU is a mess. I'm not even going to look at GU. GU has been messing around all week. So EU supply could be argued to be in control, because if demand was in control, why would it break structure and then break structure again? Doesn't form a higher high, makes a lower low. Doesn't form a higher high, I'm expecting what? A lower low. So ideally, what I would want to see is us to form an Asian range like this of about, I don't know, maybe 20 pips or so, something like that. Yeah, okay. So let's draw that out for visualization purposes. So this should be your Asian range. I want to see the following. So I want, ideally, this supply to be respected as a thing. So this to be a supply chain in line with my narrative. You're looking at it with a brush tool. Where is it? Is this it? Yeah, okay, right. So lower low, lower high, lower low, lower high. I want a lower low somewhere here. So what I want is this Asian range to form my favorite setup. I want low down liquidity. I want this bullshit to happen. And then ideally I want London to do this. That, and I want to short this thing to hell. And I want this to also line up with the fib. And I want this to happen in the London kill zone or the New York kill zone. I want it. If I see this setup, I'm going to take it. If I don't see this, I'm not taking shit because I don't have any edge here. New York. So either it happens one of these two sessions and I will potentially do my signature if possible. I will launch money this. So ideally I want this to be like this. Something like this. If I get all these confirmations, because I know where the money is. I've been waiting for this money for a while. I want this money here. Right? And then to add more statistics to this, so from a bullish or bearish candle perspective, we had what? One bullish day. So there's a 50-50% chance it can be bullish or bearish. So there's no real reason for me to think that it's either or. But more importantly, where's the week start? Here. So this is your weekly high. This is as close to our outlook as you're ever going to get from me. So you better enjoy it. Because I don't like outlooks because I don't want someone to feel like they can't trade because Neo said something and they're going against what I said. Like, that doesn't develop independent traders. I never look at anyone's outlooks, ever. Never did, never will. I like my own opinion. It might sound arrogant, but that's why I'm confident and as an independent trader, because I've never looked at other people's stuff. I just figured it out on my own. Average weekly range. So we're in November. So what's the average weekly range for November? Because that will help me forecast what? The weekly low, which I'm expecting to be on the Friday. And I'll show you the statistics. I'll show you. This is the thought process of me thinking in probabilities for me to figure out what I want to do. So where is the average? There we go. November. Average monthly range for November is 188. Last year was 285. Well, worst, okay, 91's an anomaly. So if I said 188, either way, November should be bigger than October. So if I said 188 is the target, 188 is the target, that leads me right in my liquidity zone, the way I want to be, because I want to do what? Trade towards the money. So that would be my target. Weekly target. Where is it? Oh, okay, whatever. Just trade towards the money first. Put that over here. So weekly target, horizontal ray. That's my weekly target based on statistics. How many standard deviations would that be? 1, 2, 3, 4. Probably not going to happen. So most I could probably get is here based on standard deviations, which is in line with this Asia range low that hasn't been taken. How old is this low? How do I do that thing? Ah, there we go. Asian low is 17 days old. What does that mean? Asia is 17 days old. 17 days old. 86% chance of being hit. Right. Okay, so if we're coming down, we're probably looking to take that away. So I'm aware of that, and that's in line with this, so that makes sense. So, okay, if I get this entry at the right time with everything else, like so, if I lunch moneyed it or took it like this, it's a nice 8R trade for me. Exit probably around 5 o'clock. Take out all the liquidity, makes sense to me. Where is the money? It's obviously, I know there's money down here for sure. You got equal lows here. Like there's far higher probability of we get sweeping this than us sweeping this, in my opinion. Because we already took this liquidity. And for me, this is just a giant Wyckoff distribution that they're accumulating orders to sell like hell. Like this looks like a Wyckoff distribution schematic to me. In line with what? The monthly that I want to hit anyway. So that's what, I mean, realistically, if I got into this and I know that this is probably going to be the monthly high if I'm right, based on the data, because like I said at the beginning of the call, which I'll show again. Sorry if I'm speeding through this, but I know we're short on time, so I'm trying my best here, so bear with me. I should say potential. Potential monthly high. That's based on, where is it? This data here. 83% chances within the first 4 days of the last 15 years, meaning the first week, which we're on. What is the probability of the Friday being the high of the week and us having a bearish week? Pretty low. Friday being the high on a bearish week, 4% chance over 15 years. So am I expecting Friday to sweep anything and come back down? No. Because in a lot of years, 2021, 2022, 2019, never happened. So I'm not expecting Friday to sweep nothing. Friday should stay beneath these two and continue what? The supply chain. Who's in control? In my opinion, supply. So I'm waiting for the daily high to be printed in either New York or London, taking Asia. I want to play low down liquidity, get to here, go break even, and sell this thing to hell. Partial on this day, and hold it for the rest of the month till, I don't know, 100 up. I don't know, whatever it is. That is my plan for NFP. If I don't see this, I'm not trading it because I don't have an edge unless all this plays out. I hope that answers everyone's question. Activity in the chat, let me know that I'm still awake. Right, okay. That's my NFP breakdown. Let's see what happens tomorrow. Everyone's happy? Next week, I will cover the playbook. The reason why I'm delaying the playbook till next week is because I'm revamping mine with some stuff, new stuff. So I'll cover the structure on my playbook and how I go about it. The reason why I'm not giving the template to my playbook is because the playbook, one, is personal to you. And if I give you the playbook as a shortcut like that, you won't do the work the way you need to really see the setups for yourself. So me giving you it as a handout is doing a discredit to you because you won't become an independent trader. So I'm making sure that you guys get your development because if, God forbid, I disappear, you guys need to be able to make money independently. So you guys need to learn how to trade and do everything by yourself, which is why I will help, but I'm not going to help to the detriment of you. So it's a balance between helping and helping too much. So that's the reason why I'm not giving away my playbook. Right. This has been a pleasure, guys, as always. Thank you guys for supporting me in this journey to build my own trading community with the PLD team. We are all happy to do this. We all love trading, and this has been a dream, to be honest, to even do something like this. I never thought I would even teach, let alone have a community of like-minded individuals that just want to work hard and change their lives and change their families' lives. So, like I said, thanks for this and having faith in me as your mentor. I really do appreciate it. And yeah, hope we get a smashing year, get people funded and change lives. That's the whole reason we're doing this. So till next time, and we'll see you guys later.